Today we are going to take a look at big picture. And this is one of the fundamental aspects of a DP trading system. And before dwelling further, a standard disclaimer: trading in futures, stocks or commodities can incur substantial losses. This method doesn't guarantee profits. This method is fun to see how market moves. Please don't trade using the views expressed here. Okay. Now, what is big picture is what is big picture? Big picture is a context. So to give an analogy, suppose you are going on a winter vacation and you have two options of clothing to select, one on the left and one on the right. So this is the context, and how you're going to trade is option 1 and option 2. Whether you will take long trades or short trades or long trades, it's up to you. So kind of trades that you take based on context is very important. Okay, so let's try to understand how to assess the context for markets. So we just take 6 points into consideration. First thing is the news flow. We try to understand how the news, if there is any important news that is coming, like a budget announcement or RBI announcement, something of that sort, or elections. And these are the few of the things that actually affect the markets. So if you have this in mind, you will get a clear picture what kind of day to expect. If it is a day prior to RBI announcement, you don't expect big moves on that day, right? So, and if you are trading on the day when just before or after RBI announcement, you expect wild swings on that day. Okay, so that's the context for that day. If the news flow is not there, then we try to assess the day by taking from point 2 to 6, which is the daily trend. Then we identify the basic market structure by drawing ranges, and how are ranges forming, and what is the trend based on that. So it's an uptrend or a downtrend or a consolidation. Based on how the ranges are forming is also important, and on if the new range is forming, which part of the new range is it overlapping with? Is it the upper side of the previous range or the lower side of the previous range? Will also help in assessing the trend. Then we mark any fluid spaces where the prices move very easily without much resistance. Then we we make a note of strong rejection points from the trading zones that we have drawn. So news flow is quite evident, and I'll not go much details into it. You can just look at Money Control or Reuters and try to get any important news, and also get into RBI site and try to understand when the RBI announcements are going to come. So that will take care of the news flows pretty much. Let's look at the technical aspect of understanding context. One is a daily trend, then basic market structure, and how the ranges are forming, fluid spaces, and strong rejection points. So what is basic market structure is how the waves that are formed are nothing but how the market moves. So every market, no matter what time frame or what instrument or how long it is getting traded, it moves in a waves. And this structure is hard to identify because these impulsive corrective waves are not that evident sometimes, because they are not sometimes the trend will not be that strong. It will form a weak trend like this and then give a rejection from here. So just to make our job easy and consistent, we draw ranges. For example, when the market oscillated here, we draw a range here. When the market oscillated between this point and this point, somewhere here, we draw the range here. And market oscillated here, we draw the range here, right? It's an educated rough guess to understand what the market is doing. When ranges are forming one below the other, we assume that it's forming on the lower side, the trend is to the downside. When ranges are forming one above the other, we assume that its trend is on the upper side. So okay, so let's try to take an example and try to assess the 6 points, this point 2 to point 6 from a real chart. I'm just opening a Nifty chart here, and I'll just place it to a daily trend. First thing you need to do is, once you ascertain that there are no news flows, you need to see what the market is doing. So if you look at it, market is on an uptrend if you look from a daily candles, right? So this is one candle is 1 day. So every day market is trying to move higher. It consolidated here, then it moved higher. So let's try to understand how to assess the context based on last month, last few weeks, 1 or 2 weeks back. We'll go back and try to understand what the context, how to analyze the context. So clearly, first thing we need to do is we look at the news. News is checked out, nothing much. If that's the case, then look at the context part where prices are daily, it is trending up. And let's get into 3-minute time frame to understand how the each day is behaving. Okay, so I have just marked it like this. Now this is the area where trend was actually on the upper side, then it stalled here. When it stalled here, what exactly is happening is it formed a big range, okay, on 5th of April. Now after that day, on 6th of April, the uptrend didn't continue. Prices actually stayed below the previous day close and previous day high, and it formed a range near to the bottom part of the previous range. That should give you a pretty indication that the trend is either stagnating, it will take some time, or it is on the pullback. A pullback has started. Another clue that would have given was when you draw the range, it wanted to go higher and it got rejected back. So 1 and 2, these 2 days should give us sufficient clue that okay, the pullback might have started. And subsequently, when the prices started moving down, this was a new range. It wanted to go up, again pushed back, then pushed back, right? So this is all pullback. We really don't know when this pullback will end. We can only assume when the trend ranges start forming on one above the other. Only then we can assume okay, the pullback has ended and it is a uptrending day. No, trend is continuing now. Okay, for example, here range is formed and it stopped here. It wanted to go below this range, it got pushed. So what is happening? The down trend is getting resisted here. Okay, so still we are not sure. It's actually consolidated for a long time. Then prices started moving from this range to this range, this range to this range. So roughly from here we can safely assume okay, the trend has resumed. Okay, that is how you need to assess the trend based on ranges. Okay, only 2 points. Know what is the range, if there is any new range that is developing, where it is forming. That will be the first hint. Then subsequently, if the ranges are forming one below the other, that's a very clear indication that trend is on the pull down. But the overall context says that the big picture on a daily candle says that it is on the upside. This is just the pullback that is happening. It's not a very major trend, but on an intraday basis we are interested in such trends. For example, after this day, my bias would be on the short side. I would have looked to actually short. If the prices come here, I look to short. Prices didn't get accepted here and they came back. So once the prices came here, I will look to short. Prices came here, I will look to short because it is a pullback. It may go to any extent as possible. Prices got rejected, they came back, so look to short here. Okay. So once the prices got accepted in the new range, I will look to go long here, go long here, go long here. Okay, that is with respect to the ranges. The next part, let's look at this one, fluid spaces. So fluid spaces is quite evident. Wherever you find prices moving without much resistance is called fluids. So this is a fluid, this is fluid, and do you have any fluids here? Okay. Okay, let me take out this. Okay, this is fluid. So prices, if they come here and they will move very easily. Okay. Now the next part, last point that you need to understand is what any strong rejection points. So strong rejection points are where you see prices getting rejected with very high force. For example, if you're analyzing this, prices got accepted here quite severely, then that is a strong rejection DP. Prices got pushed from here to here very severely, so this is a strong DP or rejection point with respect to ranges. And anywhere else, if you are looking at this, look at this, prices got rejected quite severely from this point to here. So one thing that you need to keep in mind is when you see such kind of rejection happening, you expect when the prices come back here again, somewhat similar kind of rejection to happen, or at least prices will try to move with a greater force from at least to half of the distance, or depending on the context, it will at least try to get rejected from that point. So that you need to keep in mind. So for example, if you look at the DP here, if you are trading on this day, which was on 27th April, the prices had got rejected from here quite severely and got moved back, and it got rejected from here and it moved. So we had two rejection points that were marked. The trend was on the higher side, so you were looking to take the trades to the long. Okay, so this was one long that was possible, could be you would have missed, and then nothing happened. But if the overall bias is strong, if it is long, and when the prices come here, if you look at the context, even though the bias trend everything is long, the DP, the strong rejection that happened here, has to be marked as a zone, and you try to assess what the price action is doing when it approaches the DP. So you don't try to enter into any long trade when the prices come from towards a strong rejection point like this. So that you can only understand if you have assessed the context and if you have assessed the trend. It will help you in taking the trades. If the bias is on the long side and the prices are coming here, and you would be more inclined to taking a breakout trade or breakout pullback trade, something of that sort here. Okay, but think twice before doing that, and have the entire context in mind before taking such trades. Okay, I hope I am able to convey what I wanted to. So it's very simple. All you need to do is just understand these 6 points. This is very clear. Daily trend is not a rocket science. You just need to keep the daily candle and see what the prices are doing, and then you have to draw ranges, rough ranges. It's not at all any artistic kind of range. Draw a rough range to see how the prices are moving. If the new range is forming within a bigger range, try to see whether it's forming on the higher side or the lower side, and then you mark the fluids, then you mark the strong rejection points, and just keep them ready when the day progresses, when your day starts. That will help you in taking just rejecting few trades which are not fitting with your context, and taking trades which fit with your context. Right? So I hope I am able to convey what I wanted to. If you have any doubts, feel free to post a comment.